Hi, it's Nicholas Charles. I'm going to be talking to you about what I think you should be investing in property today. When I first got into property, the reason why I got into property is as an accountant, I was looking through my portfolio of clients and I wanted to know who my richest clients were. I wanted to know their secrets, who was more successful than others. When we've got such a huge variety of clients, is what differentiates all our clients. Was it their industry? Was it their business new? I just didn't know. So I had a quick look at them, and all our successful clients had one thing in common. Yeah, they all invested in property. Now, it's not because they were all professional property investors, because they weren't. I mean, majority of our clients, if not all our clients, got involved in property virtually by accident. What would happen is a classic example of one of our clients that we're looking at is they would have a restaurant business, for example, and they'll be trading through the restaurant business, and the restaurant business will be doing quite well, and they'll buy the premises that they were trading from, and then they'll buy maybe the 2, 3, 4 flats that are above the property. Why? Because it just made sense. They had some cash, they wanted to invest it. Why not? And what's happening now over the years, we're talking about clients that have been with us for 30, 35 years, is that the property that they accidentally invested in is now worth substantially more than their business. Why? Well, if you look at the trends in property, look at the growth in property compared to the growth in your turnover of your business. I mean, when you start out, business turnover pretty much increases by inflation, whereas property goes way over above that. I mean, on average, property grows about 8% per annum in this country. If you don't believe me, just look at the trend, just go on the government statistics. You know, the facts are there to be seen. I mean, let's look at the last recession, for example, the last major recession outside of the one that we're currently in at the moment. Look at the 80s, late 80s, early 90s, when there was a massive property crash because interest rates were staggering 10, 11, 12%. Look at the property prices as they were in them during the biggest recession ever, and look at the same property prices now. I guarantee you they've all gone up. They've all gone up. And to give you an example, is what you need to ask yourself is, what do you need to do to increase your business from £100,000, say, to a £200,000 business, or from 1 million or to 2 million? And don't forget, properties in these prices, when they're going up 8% per annum, even on a stagnant period as we are now, I'm talking about long-term averages, they tend to double every 7 to 8 years. But you need to ask yourself, what do you need to do? And are you confident in doubling your business profits every 7 to 8 years? And how much effort would it take on your behalf to increase those profits? And don't forget, what I love about property, and why a lot of my clients like property as well, is it's something that you can do on the side of your business. You need to park your money somewhere. You need to put it somewhere. You need to put it in a vehicle that grows. Money attracts money. A lot of the entrepreneurs go out and say that. So what are you doing with your money? Are you putting it into a bank and yielding 1%, maybe 2% interest? Or are you putting it into a property that maybe, if you're doing your research, you can probably purchase at 20, 30, 40% below market value. And it's also yielding you 6, 7, 8% easily. You can find properties now that are yielding that sort of return. And don't forget, once you've purchased your property, what are you doing about it? Nothing. You've got the agent that's run the property for you. The only work that you have to do with property is probably the research to find it, maybe find the right sourcing agent, the right solicitor, the right accountant even to look after your rental income when you get to that stage. But once you've purchased the property and once it's being managed for you by an agent, what is your involvement in that property? Apart from collecting the check? Nothing. You're sitting back, and that property, in the long run, will grow. There's obviously strategies and areas that you need to look out for. We're not going to cover that now, but it's so important that you need to understand that your money, as they say, is working for you rather than you working for your money. That's the crucial thing about property. So again, key areas you need to look out for in property: leverage your income. You can borrow against it up to 75% in current rates. You can purchase below market value, so you're even increasing the value of the property you're purchasing. It's money that you're making, leveraged income because you're not working in the property but it's still bringing you income, and capital growth. These are the key areas that why I think you should be investing in property today.